Hello and welcome to MarketBeat's financial news and analysis. At the beginning of the COVID-19 pandemic, some analysts called for the death of the vacation cruise, but as we've seen, that has not been the case. Cruise line bookings were strong in 2022 and continue to show momentum in 2023. Stocks for these cruise line companies have done well too, but are they a good investment? That's the question we should be asking ourselves. I have Chris Markoch with me today, and he is telling us that cruise line stocks still present substantial risks for investors. Chris, tell me what you mean by that.
So first of all, Laycee, thank you for having me back.
Yes.
Cruise line stocks have gone up sharply since the start of the pandemic, and quite honestly, that was to be expected. I always thought that the narrative that the cruise industry was dead was a little bit overplayed. And analysts right now suggest that these stocks may have further decline because they're excited about seeing the bookings that these cruises are reporting. But right now, the stocks still seem to be a little bit more of a trade than an investment. And the reason why is because I think there are several headwinds that perhaps some of the analysts aren't factoring in. And those are the debt that these cruise lines have taken on, the pricing power that they have or don't have, and still the possibility of a recession coming in the United States.
All right, and I want to hear more about that, but first, double check that you are subscribed to this channel, and if you aren't, go ahead and click that button super quick for us. Your help to grow this channel will allow us to keep you up to date on the stock market news affecting your portfolio. All right, Chris, back to our discussion on cruise line stocks. Why should investors go overboard on these stocks? All I hear is that cruises are more and more popular. Does that not match up to say we should be adding some of these stocks to our portfolio?
It doesn't. And the reason why I say that is because you have to look at this and you have to ask yourself the question, why are cruise line bookings so going up so much, and for how long will that last? Investors shouldn't ignore the fact that, yes, there are people that love cruising and they were always going to come back to cruising no matter what. But the cruise lines did have to offer some of their customers substantial discounts to get them back on a boat. And so far, that looks like it's working out fine. But here's now the question for the companies. At what cost does that come? If these companies, since these companies did take on significant debt to stay afloat, no pun intended, during the pandemic, the question now is they're looking to convert that to profitability. And that means they're going to be looking to raise prices. And that could be a little bit dicey. Some travelers are finding that the cost of airfare to get them to where they're sailing from is actually more expensive than the cruise itself. And I think you know that airfare is not likely to go down anytime soon. So now you're going to be asking potential travelers to add on the idea of a more expensive cruise on top of already expensive airfare. Not sure if that's going to work out well.
All right. So in other words, you're not sure that the cruise lines have pricing power.
Right. And they have to have it right now because the debt loads that they have in 2023 are so much significantly higher than they were in 2019. I wrote an article for MarketBeat about this. One of the examples I used was Royal Caribbean, which I actually think is probably the best of the bunch if you were looking at cruise line stocks, but they're projecting to have somewhere in the area of about $4.80 of profitable EPS in 2023. But if they achieve that number, well, that's really good because they've been at a negative EPS for the last several years. It's still about half of what their EPS was in 2019. And when you start looking at the share prices, they were about $133 then, they're at about $70 now. And I know that that's not necessarily an apples to apples comparison for some investors, but they're trading at around 20 times earnings the last time I checked right now, which means they're not a value. They're certainly not a bargain right now. And I would question how much room they have to go up. And it just seems like right now that $4.84 seems like a pretty optimistic estimate. Another example in another area of the business that they have to look at is a company like Carnival. If you look at Carnival's shares, their outstanding shares have grown from like 684 million before the pandemic to over 1.3 billion today. That's a lot of share dilution that investors have to swallow. And then when you add on top of that the fact that Carnival's debt's up almost 3 times where it was in 2019, I'm just not seeing a fundamental picture here that I like for these cruise lines.
All right. And if the economy slows down even more, it would have to start taking a bite out of travel eventually. Is that your other concern?
It is. So far, revenge travel has held up very well. And again, I'm not suggesting that I know when it's going to end. There are some people that are lobbying for the no landing approach, which means that consumers are just going to spend their way into oblivion. I'm not necessarily sure I see that. The latest economic data that I'm seeing is saying savings is going up, but so is credit card debt. At some point, consumers are going to back off. And I actually heard something that was very interesting last week from a senior writer at Barron's that theorized, I should say, that a lot of the revenge travel that we're seeing that's lingering into 2023 is the result of a lot of tech workers that got laid off at the end of 2022 who are deciding, well, I've got a severance, and before I go back to work, we're going to go ahead and take 1 or 2 trips that we've been putting off. And that might be the reason why travel is holding up. If that theory is correct, then we could be probably expecting to see a drop off in travel as we get into the second half of this year.
So should investors buy cruise stocks? Are you buying cruise stocks, Chris?
I am not. No waffling on this one. Right now, this isn't an area that I would be looking at. None of these stocks are paying dividends. That would all put them in a category of risk on in a risk off atmosphere. That's not for me. I would need to see profits, or at least a dedicated path to profits, before I decide to go back in any of these stocks. Despite the gains that they've made since the pandemic, they're just not fundamentally in the same shape that they were in 2019. That's not the fault of these companies. It's not to say that these are poorly run businesses. It's just the nature of the economy as it was then and it is now.
All right. And be sure to check out the recent article Chris wrote titled "Cruise Line Stocks Still Have Some Choppy Waters to Navigate." I'll go ahead and link that down below so you can do some further analysis if you wish. Be sure to leave us a comment down below and let us know if you're a cruise enthusiast and will you be taking a look at investing in this industry. Thanks everyone for tuning in. Please be sure to hit the subscribe button on your way out. Chris, it was so great chatting with you today. Thanks so much for your time.
Thanks for having me, Laycee.